Hi, I'm Dan Isard, and this is another video installment educating the members of the Independent Funeral Directors of Florida on I-succession. Today, I want to begin to introduce you to some of the companies and people that are working to help develop I-succession and serve you as a member of the IFDF. I-succession is the most unique association benefit anywhere in funeral service. Today I'm going to introduce you as the first step in this process to Teresa Carlson. Teresa is the Vice President of the Bancorp. Bancorp is the principal lender that has created a loan program specifically adapted for the needs of IFDF members. Whether you're selling to a child, a regional member, a key person, or looking to make an acquisition yourself, this loan program will be very, very beneficial for you. Before I bring Teresa into the dialogue, let me talk about lending, lenders, and help you understand the importance of picking the right lender. There are many categories of lenders. They can be banks, credit unions, brokerage houses, mortgage companies, specialty lenders that are not banks, insurance companies, and even individuals. Most lending, however, is done with the underwriting of the SBA, Small Business Administration. Regardless of what the lender calls the root of their business, there are two types of lenders: commercial lenders, also known as asset-based lenders, and cash flow lenders. Commercial lenders make loans on assets. For example, if you want to buy a building, they'll make you a loan. They call it a mortgage. And they'll place that mortgage as their collateral on that building. Typically, they loan 75% to 80% of the value of that building, which means you, the borrower, have to come in with anywhere from 20 to 25% the value of that building. Cash flow lenders also make loans on tangible assets, but the key to them is they will make loans on the intangible assets. Hopefully by now you know the intangible assets go by the name goodwill. Most funeral home loans for acquisition need to be with cash flow lenders. That is because the goodwill of a funeral business can be up to 40% or more the total purchase price. Cash flow lenders take a lien on tangible assets, but they underwrite the EBITDA, the earnings before interest, taxes, depreciation, and amortization of the business, to determine if there is more than enough EBITDA to pay the loan payments. There's much jargon used in the lending business. I want to help you understand what those words and phrases mean. The phrase amortization term basically means the time period that you're going to be paying the loan off. An amortization period is the time that the loan gets paid off in full. It's possible that a loan could be shorter than the full amortization period. That would be if the loan has a balloon, meaning the loan is paid off at some point before being fully amortized. For example, you could have a 25-year amortization term, which means the loan is going to be paid off over 25 years, as an example. Or you could have a 25-year amortization term with a balloon at the end of 10 years. Again, just an example. That means you would have the loan being paid off on schedule for 25 years, but at the end of 10 years, the loan is due and paid at that time. Whatever the outstanding balance is at the end of that time period, that is what is due. The interest rates for a loan can be fixed, variable, or something in between. For example, you could have a 25-year amortizing term with a rate that is fixed for the entire period. Or you can have a 25-year amortizing term with a rate that's fixed for, let's say, 5 years. And then the interest rate changes to the current rate. And then it's fixed again for the next 5 years. And so on until the loan is paid off. Of course, you can have a variable rate loan, which means every time the interest rate changes, whatever your interest rate is pegged to, your loan rate will change. It can go up, it could go down, depending upon the indicator. Most often we see the indicator being the prime rate. Another phrase that you'll hear in lending is prepayment penalty. Oftentimes, fixed rate loans have a prepayment penalty. It could be 3 years, it could be 5 years, it could be through the term of the loan. Today, I have the privilege of talking to Teresa Carlson from the Bancorp. Teresa is one of the key people as part of the iSuccession team that's going to help with the funding. Teresa, thank you for talking to the IFDF membership today.
Thank you for having me. Good morning, everyone.
Teresa, as a lender, what is it that makes the difference between cash flow lenders and asset-based lenders?
Asset-based lending is exactly as the term implies. The lender will place a greater value on the asset, for example, the real estate, as opposed to the cash flow of the business. At the Bancorp, we are a cash flow lender. We will review both past, present, and future cash flow of the business in order to see their repayment ability. It's not to say that we're not going to take collateral, but it is not going to be the driving force of the loan. The cash flow is.
Oftentimes, asset-based lenders have limits. What makes cash flow lenders have greater security in a business than just the value of the assets?
The cash flow will let us review what growth ability is there for the borrower to possibly grow the business from renovation, expansion, possibly buying competitors. We can kind of see what the cash flow will endure, so to speak. So we're not going to focus on the collateral and what that brings to the table. Not that it doesn't bring anything of value, of course it does, but we're going to want to see what, again, that repayment ability is for the business to have growth. Again, both with expansion, purchasing the competition and so forth. So that's going to be our greatest focus. What is the cash flow ability of that business?
Are there any specific advantages of dealing with cash flow lenders rather than asset-based lenders?
Absolutely. Absolutely. Many times in the funeral service, the brick and mortar is worth a certain amount of money, but the goodwill portion of that business is vastly more. And so from a cash flow standpoint, and again, us focusing strictly on the cash flow and not the collateral or the asset itself, we're going to be able to stretch more than most lenders could.
In the small business lending environment, through the SBA, there are two types of lenders that most people never even know the difference between: a PLP, and a non-PLP lender. Could you explain the difference between the two?
Absolutely. So PLP refers to preferred lending status or preferred lending program. The difference between PLP and non-PLP is that the SBA has granted us the authority, and here at the Bancorp, we are a PLP nationwide lender, and the SBA has granted us the authority to approve the loan without consulting with them, basically. What we do is we'll take the loan into underwriting, approve the loan, and then we get into kind of an electronic system and request a loan number. We're not requesting approval. We're just simply requesting the SBA's loan number to place on our documents because, again, we have been granted the preferred status to do the loan without the SBA's approval. When you're a non-PLP lender, you're required to package the loan and actually send it to the SBA for their review. They may or may not have questions. And then you come back with rebuttal, back and forth until the loan is approved or declined. It just depends. It's the SBA's authority to approve it and to decline it.
So with a non-PLP lender, non-PLP approved lender, it's possible that the loan is actually underwritten by someone that's never seen a funeral home loan before.
It is possible. Yes. So the underwriter at the SBA, they see a vast amount of loans from every industry across the board. So it is possible that they've never seen a funeral home before. That is very true. The other thing too is that, as a non-PLP lender, there is quite a bit to packaging a loan to SBA. So you have to make sure that the loan is packaged properly so that when the underwriter receives it, they can quickly understand what the loan request is, what the strengths and weaknesses, credit of the borrower. It goes through all of those types of things, but you have to make sure that your presentation is going to be able to get that loan across the finish line with that underwriter who may or may not have ever seen a funeral home before.
With the addition of you and your company to the iSuccession program, what are the typical limits that we would expect members to have to try to live within?
Two types of programs exist for IFDF, and that is the SBA program. It's the 7A program. That has a limit of 5 million. So loans 0 to 5 million are going to fall into that product. The other product that we've come out with is a funeral conventional loan product. And that product is really more for from 5 to 20 to even $30 million. Those are for large acquisitions, partner buyouts, debt refinance.
And this is a program that you've masterminded for funeral homes.
Absolutely. I am quite proud of it, Dan. We put our heads together and we said, how are we going to keep independent funeral home owners independent? They need access to capital. They needed a conventional product, and there's literally nothing out there. There was nothing out there when I got this launched last year. It's been successful. It was a little bit of a slow road, quite honestly, because the interest rates have changed. But people adapt and understand that you can't miss these opportunities. You're going to still need to grow and grab that competition when it's available for sale, and not wait till rates come down, which could be another 24 months before we see some sort of tick down in the rates. But the conventional product was absolutely a need. It's a game changer in the marketplace. We're just hoping to get the word out as quickly as possible so that these independent funeral homeowners stay independent. One thing about, though, the funeral conventional product and the SBA product that also sets us apart is that we do offer fixed rates, and a lot of our competitors are not. So that's one thing about the Bancorp is we do offer fixed rates, long-term financing for the funeral professionals, so that we can ride out this cycle of case volume, kind of going up and down, and helping them with a long-term plan, a long-term financing product, so that they can kind of ride out those cycles of case volume that we've been seeing here and there.
Teresa, what should someone expect as the possibility of what terms of interest relative to prime, as well as the length of loans that you're able to finance?
The SBA product, let's start with that one. We do offer a fixed rate. If there is real estate involved in an SBA transaction, we will do a 25 fully amortized loan. If there is no real estate, so for example, if a funeral professional purchases a competition, but the owner doesn't want to sell the real estate, as an example. So we're just strictly buying initially the business. That loan would be for 10 years.
Teresa, what are the different purposes that your lending can facilitate?
The SBA product by far will do everything. So for example, purchase real estate, purchase the business, renovate the property, maybe possibly add a crematory at that time. It can go for all those different items, working capital, everything, debt refinance, partner buyout. The SBA product will do all of those things in one fell swoop. The difference between the SBA and this funeral conventional product is that the funeral conventional product is going to focus on 3 items: debt refinance, partner buyout, or purchases. Just those 3 for the conventional product.
Teresa, are you going to be able to be present to meet people at the upcoming convention at Hammock Beach?
Absolutely. I'm so excited. I will be coming out on Tuesday, and I will be participating in the golf tournament on Wednesday and hope to see some folks out there. And then I will absolutely be on the floor on Thursday for the trade show. So if anyone has any questions, please come up and chat with me. I'd love to take a few minutes and see what opportunities are out there for you and see how I can assist you.
Thank you very much, Teresa.
Thank you so much for having me, Dan. I appreciate it.
Well, there you have it. This exceptional form of creative financing is a special part of the iSuccession process. In upcoming videos, I'm going to introduce you to some of the accountants, valuation experts, legal, and other professional teammates that have agreed to be part of this to serve you. If you have any questions for Teresa, here is how to reach her. If you have any questions for me, here is my contact information. Thank you for watching.